Assalamualaikum warahmatullahi ta'ala wabarakatuh. Today, we will discuss about challenges and opportunity of Islamic banking and financial institution in Malaysia. The first challenge are late payment charges and the issuance of fines. Malaysian Islamic Bank use the concept of ta'wid, which is the compensation, and gharmah, the punishment. However, it may cause uncertainty in the contract, and assessing the facility's actual loss or reimbursement might be challenging. According to Muslim scholars, the recovered cash is type of retribution for the bank loss, as Islam permits payment for the loss. Next, Islamic bank are required to meet with maqasid syariah. Current Islamic financial products, in other hand, have been shown to fail a bit of Shariah's goal. It is moving toward debt-based financing, which is not Shariah intended outcome for the economy and people. As a corollary, the researchers advise Islamic banking to adopt more profit-sharing financing solutions. Aside from that, sukuk trading is related to buy-and-dai, which is involved in debt for delayed payment. Conversely, International Islamic Fiqh Council allows debt to be sold to a debtor on a spot price basis only, not at discount. Furthermore, the distribution of takaful benefits become an issue when some family takaful is considered as a wasiah or a sole beneficiary of the benefit. For payment purpose, it should be treated as fara'id and as an executor, and the benefit should not be deemed as wasiah. My last point is debt-based financing is increasing the burden of debt among Muslims. As a solution, more awareness initiatives for Islamic banking and finance are urgently needed, and they must ensure that Islamic banking is not involved with riba, gharar, and maisir.
Challenges is misunderstanding of the concept of Islamic banking. According to Zaharuddin 2011, misunderstanding of the staff regarding the concept and implementation of Islamic banking is one of the real obstacles that can prevent the progress of Islamic banking from improving.
Okay, now I will explain on the challenges of social media market dominance. Most customers of Islamic banks themselves are unaware of the products offered, such as investment product and investment saving products, due to the lack of notification to the customers from the bank itself. If the banks give the reason that customers can find information on the internet themselves, it is unacceptable because information regarding all product offerings on the internet is very lacking, limited, and has some obstacles. Next, lack of needed skills in handling social media. Some researchers have reported most banks do not fully use social media for the purpose of communicating information, interactive communications, information exchange, and collaboration with well-known brands. The third one is weaknesses in controlling the safety of information systems. This is also true due to the fact that banks face various high-risk problems such as weaknesses in information security systems.
Moreover, the next challenging is concentrated banking. Islamic banks have a narrow deposit base. They avoid direct competition by targeting specialized market. As an example, one Islamic bank may specialize in agriculture financing, while another may specialize in construction finance. Differential exposure to sector-specific cycle shocks. Lack of diversification exposes them to new competitors. Particularly, abroad conventional banks are better suited to this challenge. This lack of diversification in deposit or asset base create risk. Islamic banks' assets are consolidated too. Islamic banks lack sufficient geography and product diversity. Currently, they rely heavily on depositors. Investors prefer to relocate their money to bigger, more secure financial institutions when circumstances are tough. It is called displacement risk. When an Islamic bank pays its investment depositor more than the actual requirement of the investment contract, it faces displacement risk. Islamic banks utilize similar methods to prevent cash withdrawals. It may reduce risk of displacement or withdrawal for Islamic institutions. Geographic diversity on the liability side is now possible and should be supported. Next, we move on to the next challenge, which is limited scope. Financial intermediaries plays a vital role in the supply of financial service in the absence of debt market and the developed stock markets and a lack of derivatives market. Financial intermediaries are not only the primary source of money and risk reduction, but they are also required to engage in activities with a broader scope. Because of the changing global financial environment, Islamic banks will be required to move beyond their traditional position as commercial banks and developed sectors such as securities, risk management, and insurance that are now non-existent or operating on a limited scale. The line between conventional commercial banking and investment banking is becoming more eroded, and there is a worldwide trend toward combining financial and non-banking activities. Although this tendency is popular in big industrial economies, many developing areas where Islamic finance is practiced have not adopted it.
Next, we move to the opportunity of Islamic banking and financial institution in Malaysia. First, use of fintech for wakaf, crowdfunding, zakat and others. This will make it more transparent and efficient. Second, increased role of Islamic microfinance institution. As we know, InFiz are considered as successful tools in financing interest-free loan. Third, in education, health and food. Islamic banking and financial institutions play a decisive in providing food, health and education to society. Fourthly, social responsibility and solidarity. This concept gained popularity and acceptance among the Western scholar.
Islamic financial institutions can expect to encounter new set of regulatory and supervisory norms that will contribute to their distinctive financial operation to the general public. There is also a growing awareness and understanding of the unique nature of Islamic banking and fiscal activities among the worldwide financial community. Let's move to the other opportunities. Islamic financial institutions have the value proposition of developed Islamic market, Islamic banking, and Islamic products. They must provide a diverse range of new Islamic finance products as well as a distinct professional approach that is precise and timely. The Sharia advisory boards and the central banks can streamline and reinforce their duties. Banks must be required by a regulatory agency to disclose critical information to investors in order to improve the efficiency of financial markets.
On the next opportunity side is effective marketing. Shabir and Rahman in 2019 says before making any significant physical changes, the bank must provide an ideal concept that is capable of explaining the overall development both within and outside the Islamic financial system. Among the things that Islamic financial institution IFI can do is to restructure the handbook according to local understanding and not merely according to the professional standards of the bank. Development regarding investments and new products should be updated more perfectly to avoid customer confusion and comprehension. After completing the ideal concept, next moving to improve the information transfer or IT system. The urgency to enhance IT expertise to safeguard customer information while at the same time supervise and study deficiencies in the current system and social media of Islamic banks in Malaysia. And last one is upgrade social media skills. In the social media market, banks should adopt a more customer-friendly approach and constantly update current issues involving the relevant financial systems of the country and abroad. The use of a customer-friendly approach in question is to use the appropriate platform such as Facebook and Instagram.
Of completely interest-free products. In 1985, interest-free financial institutions were introduced to the market and special finance houses (SFH) were founded to provide interest-free products and services. The context in which Islamic finance functions is one of its primary challenges. Currently, Islamic finance is limited to the traditional interest-based structure. As a result, many Islamic financial instruments are viewed as simply imitation of conventional financial instruments. This presents one of the best opportunities to create products that will be free of interest. The conclusion is, even though Islamic banking is not easy, but we believe that by making Islamic banking available through conventional banking, a huge section of the Muslim population may become aware of the benefit of Islamic banking, thus leading to a higher